Hey everybody, today we're focusing on Rob Vinall's portfolio from RV Capital. 13F filings have been coming out over the past week, and for me, I really follow really closely several different super investors. I like to see what they did in the previous quarter to see if there's any new buys or if they're selling positions entirely or selling big chunks of them, just to kind of reevaluate some of my portfolio. In fact, most of the stocks in my portfolio, I would say were cloned from other super investors where I saw other super investors buying that stock. I did my own research and then getting into that particular stock afterwards. And Rob Vinall, I would say, is not your typical value investor by any means. I would say he's more of a growth type investor overall. And so his portfolio during down times tends to do worse than the market. But when the market's doing well, his portfolio tends to do better than that. And last year, his portfolio did really bad. I think he was down around 47%, something like that. But this year has been a really good rebound year for him. And I got his fact sheet for Q2, which goes into his top 10 positions and also how well he's performing this year, which we'll touch base on. We'll also take a look at stocks that he bought during the quarter and also ones that he sold. And one in particular, he added quite a bit to. So we'll be focusing on that stock a lot in this video. I'll be doing a valuation of that stock and kind of giving my thoughts on whether I'm interested or not as well. And if you like this video, please hit that thumbs up button. It really helps out the channel a lot. I personally appreciate it. And we'll just jump right into this. All right, so we're on a website called Dataroma. I've talked about it numerous times on this channel. It's a free website. You can go check out different super investors. They tend to focus on value investors overall. Rob Vinall from RV Capital is certainly one of those out of 100 that they follow on there. And so as of the last quarter, this is what it's showing in its portfolio. Now, keep in mind, Dataroma only focuses on 13F filings, which are stocks on the American Stock Exchange. So if he's invested in stocks on international exchanges, which he does, they're not going to show here. So we'll touch later on when we look at his fact sheet about some other stocks that don't show up here. But according to Dataroma, he has Credit Acceptance Corp, which is roughly 28% of his portfolio. It's a little lower than that because it doesn't have his international holdings in here. Meta Platform, second largest. Salesforce, third. Wix.com is his fourth largest, and Interactive Brokers, Carvana, and then Trupanion. So the two stocks he sold during the quarter, or at least reduced, which is a very small reduction, was Meta Platforms and then also Salesforce. Then he added roughly 2% to his Credit Acceptance Corp, which was kind of interesting because he's been kind of shedding that one a little bit as that's grown. But the one he added to the most during the quarter was Interactive Brokers, ticker symbol IBKR. He added roughly 41% according to Dataroma. In fact, let's go jump over and take a look at Ticker Terminal. That's another website that I use, or a platform that I typically use. And if we go over to Tracking Investing Gurus over here, let's type in RV Capital. Nice thing about this website, it actually gives you not just the 13F filing stocks that show up, but also shows other stocks that might be in other exchanges as well besides American Stock Exchange, like the NASDAQ, for example. And, I don't see anything else on here, but we know when we look at his fact sheet that he's got Prosus, and I also believe he has Alibaba as well. Those are not going to show up just because he's got to own 5% or more of that company, and both those companies are absolutely massive. You're talking over $100 billion type companies, so they're not going to show up here. So these are kind of showing the same exact numbers that we saw on Dataroma, so just kind of interesting there. So now let's go take a look at his fact sheet, and we'll kind of see what that looks like overall. And let me just bring that up real quick, just downloading it real fast. And that is here. So I sign up through his website or his platform, so RV Capital. You can go take a look at it, do a Google search on that, and you can sign up on there and ask for these fact sheets. I know other people have had issues trying to get accepted. I didn't have any issues with that, but I do get this every single quarter. And he does send out 2 letters a year, usually one at the beginning of the year and one mid-year, kind of giving an update on the positions and kind of his thoughts about his market. And I'm surprised it hasn't come out yet mid-year. Last year it came out late, but he had some medical emergency that happened. So hopefully everything's fine with Rob and he's not having any issues this year. But I would imagine his mid-year letter should be coming out relatively soon overall. So we first take a look at how well he's done this year, 2023. January through June, he is up about 27%. So obviously that's pretty good. I think the market, I want to say the S&P is up around like 12 or 13%, something like that, year to date. So he's doubling that, which is good. But last year he was down 47%. Huge loss. Alibaba obviously fell a lot. He was in Carvana. That one also took a huge dive as well. Prosus took a big dive too. So not a good year for him last year. But he has done well since he's founded this back in 2008. I think he's up around, 570% roughly overall. At least they invested in him back in 2008. You're up 500% from that standpoint. Now, as far as his top 10 position in his portfolio, now these are in alphabetical order. This is not necessarily ranked by holdings in his portfolio. So he has Carvana, Credit Acceptance, Granke's International, didn't show up on Dataroma or on Ticker Terminal, Interactive Brokers, Meta Platforms, Prosus, Ryman Healthcare is another one of those companies on the foreign exchange, Salesforce, TFF Group, another foreign exchange company, and then Wix.com. I also believe he still owns Alibaba. Hopefully we'll find out in his mid-year letter when it comes out from there. So his top 10 holdings are right there. Now Carvana has, interestingly enough, had a decent bounce back here recently. So if we go take a look at Carvana, right now it is trading at, let's think in here, I think it's close to $50 a share, I want to say. Yeah, so $45. But you take a look at this year-to-date chart, what a tick up. I mean, it was around $4 and it's all the way up to 45. So you're talking an 800% increase since the beginning of the year. So if you bought at $4 and then held to today, you had an 800% increase. However, if you look over the last year, it's still up, I guess, 60%. But over a 3-year period, it's down 70%. So at the highest point is around $360. So depending on how you look at it, when you bought in, you may be up really big or you might be down really big. And I think he's going to be down overall. From what I gather, looking at when he's bought in, he probably has around a $75 cost base, between 75 and 100. So he's probably still down on that position, but it has rebounded this year, and we'll kind of see where it goes. Now, what I really wanted to talk about in this video is Interactive Broker. So IBKR, that's the one he added 40% of it to his position. And so obviously he likes the price point even now at $83. And look at, year to date, it's up 16%. And so with him still buying in the quarter, it still tells me that he likes where it's at. So now we don't know what he bought in the quarter. Was it down the lows of around $70 or was it around $80? We don't know that. But we do know is that he did add to his position. If we take a look at, financials for Interactive Brokers, a couple things stand out for me overall, and I'll make this a little bigger so you guys can maybe see it better here. They've been growing really fast as far as revenue goes. Over the last 4 years, you're talking at 12%, 23%, 15%, and it looks like almost a 20% in the last 12 months. So they're growing really fast on the top line. Another thing that stands out to me is the operating margins are absolutely incredible, and they've been growing. So 55% all the way up to 69% in the trailing 12 months. One thing, because I did talk about this company in the last video about Rob Vinall after the first quarter, is one reason that the operating margins have been growing so much is that they are reducing their cost internally. So they're trying to automate everything, and that's one thing that stands apart. Kind of gives them their moat is that they are automating everything. They have a lot of engineers. It's engineering based behind the scenes, and so they're making everything kind of a low cost provider. Another reason why they have a moat is that their interest rates are really good. So if you create an account with them, the interest rate you can get for cash is around 4 or 5% in the United States, which is absolutely tremendous compared to like Schwab I'm with. I think I get like 0.5% or something. It's absolutely terrible. At just having cash in there, their margin, what they charge to investors is quite a bit lower than other companies as well. So they do have a moat, I would consider, compared to other brokerage firms out there. However, one reason why their margins are growing so much is that with interest rates going up over the last year or so from the Feds raising those rates, and we've seen rates going up internationally as well, that actually has helped this company. This is one of those few companies that actually like seeing the rates go up. So they've actually seen increased margins from that. So as rates tend to plateau and they come down, that is going to hurt their margins. And so it's kind of somewhat difficult to figure out what those are from Interactive Brokers from a 25, basis point increase. I saw somewhere on their website it was around $100 million increase to their net margin, and so theoretically, those that should go down as rates go down, but their cost that they're saving, the efficiencies that they're making from their cost savings from making their platform more automated, should grow over time. The question is, where is that going to be? So next, let's take a look at what estimates look like for over the next few years from analysts. And we can actually see here they really think the company is going to grow roughly on the top line about 7% for revenue. But from an operating margin standpoint, they think it's really going to drop from around 73% this year down to 64%. Now, I have read articles where people are really bullish on their operating margins, thinking they can be in the 75 to 80% long range. So depending on what side of the aisle you are, will really determine what the valuation of the company is. In fact, I'll bring up a valuation I just recently did on them. And you can see here, I feel like I'm being pretty conservative. I think they're only going to grow from about 4.3 billion of revenue this year for 2023 to about 5 billion in 2027. So from that standpoint, I think they're only going to grow around like 2, 3, 4%, somewhere around there. But if you look at 2022 to 2027, that's around a 9% growth as far as revenue goes. Now, analysts think it's around 7 or 8%, so I'm a little more bullish than them, but I think that's still reasonable for Interactive Brokers. Now, as far as operating margins go, I think analysts said they'll drop down to 64% in the next 4 or 5 years. I think 66% from everything that I've seen seems like that's a good operating margin that they can hit, because they were around, if I'll bring it back up here a second, they were around, let's see, the operating margins in 2021, for example, they were at 66%. So I still think 66% is still reasonable for them, and they should still potentially even grow that based on the cost efficiencies that they're creating behind the scenes. So what's interesting, and I think why this company is really hard to value, is they have been growing really fast on the top in the last couple of years. Where are they going to go going forward, right? I'm saying 9% from 2022 to 2027. Operating margins, where are they going to fall? Is it 65? Is it 74? Is it 66? Is it less than that? And then another interesting thing I think about Interactive Brokers is the market multiple. The market multiple, what the market is willing to pay for the company, it has been incredibly low. Like right now, it's around a 5 to a 6 based on EV to EBIT multiple. So from enterprise value, they're around $15 billion, and their operating income over the last trailing 12 months has been between $2 and $2.5 billion. So Right now, it's around a 5 to a 6 market multiple from an EV to an EBIT standpoint. So that's really low for a company that should be able to grow the revenue, even if you sandbag it and say 7%, and you say their operating margins are going to drop to 64%, that probably gives you an operating income growth of around 7-ish%. So having a market multiple of around a 5 or a 6 is really low, really, really low from an EV to EBIT standpoint. So it's interesting. So if you think that market multiple is going to expand over time, it looks really interesting at this particular point in time. So if I say that they grow 9% top line, 9% operating income, market multiple should be around an 8. I get an intrinsic value of $126, which is higher than what I came up with 3 months ago, but I feel like I understand the company a little bit more right now. So that's a 34% margin of safety. However, I'm personally not investing in Interactive Brokers right now. I feel like I need to still gather more information on them. I don't feel like I fully understand the business entirely and where the numbers are going to be at 5 years down the road, even where they're going to be at 2 years down the road. In fact, I actually opened a new account with Interactive Brokers today, so I'm going to start trading on their platform, get more familiar with it, and then do more research on to see if this is a company that I want to buy into long term. But it's very, very interesting as of right now. All right, so those are my thoughts about Rob Vinall during the second quarter. We can see that his portfolio is up around 27% this year, which is still a negative 20% if you take it from the beginning of last year till this year. But like I said, he's a growth type investor. And with that type of mentality and particular stocks he's looking at that have big growth going into the future or have what he thinks very, very high value or they're trading at right now, he tends to do worse when the market really falls, but tends to do better when the market's doing really well. So we're going to kind of see where it kind of plays out long term as I think portfolio is up around 540%. Since 2009, that's not nearly as good as, say, the NASDAQ, for example. And I don't even think it's as good as maybe the S&P 500 since that time. Probably pretty close to that, but I don't know if that's doing any better. But certainly, I do like his strategies overall. Some of the stocks that I'm in right now, say like Wix.com, is one that he owns as well. I think a stock that has some really good growth going out into the future. Spent a lot of money internally, cost a lot of money on the bottom line, and so a lot of their free cash flow yield has not been as good. We're going to see some of that expansion going into the future from like a Wix, for example. But Interactive Brokers is one of those. I think that it's very, very interesting. I'm going to continue to dig into. But I would love to hear from you guys. I mean, do you own any of the stocks that he owns, from Wix to Interactive Brokers to Carvana to Trupanion, Credit Acceptance Corp? What do you think about him as an investor and his strategy? What are some of your favorite super investors that you follow? I'd love to hear from you down in the comments below. Don't forget to like the video on the way out. I'll catch you guys on the other side. Take care and God bless.